Vietnam entered 2026 with greater political clarity and improving economic momentum. The conclusion of the 14th National Party Congress, with General Secretary To Lam reappointed for a new term, has provided markets with a clearer view of Vietnam's leadership direction and set the stage for a pro-growth government with a stronger focus on policy execution. On the external front, Vietnam's foreign policy remains anchored in strategic neutrality, underscored by the recent upgrade of relations with the European Union to a comprehensive strategic partnership. Before we look at the macro data, a quick note on seasonality. In 2025, the Lunar New Year fell in January, while in 2026, it is in February. So year-on-year comparisons for some indicators are not fully like-for-like at this point. We will revisit the trends using combined January-February data for a fair comparison. Retail sales grew 9.3%, supported by a strong recovery in tourism. International arrivals reached 2.4 million in January, up nearly 19% year-on-year. Asian visitors continued to dominate, while European arrivals surged almost 60%, helped by relaxed visa policies and new direct flights such as Hanoi-Milan and Ho Chi Minh City, Copenhagen. Foreign direct investment also started the year on a positive note, with dispersed FDI reaching $1.7 billion, up 11%, and manufacturing accounting for more than 80% of the total. Notably, Kim Long Motor Huge ASC partnered with BYD Battery to develop a $135 million EV battery project. At the same time, global semiconductor supplier ASML is exploring supply chain expansion, training, and R&D cooperation in Vietnam, pointing to opportunities to move up the value chain. The conclusion of the 14th National Party see public investment remained robust, rising over 19% year-on-year, with large infrastructure projects launched early in the year and construction activity visibly accelerating. Business sentiment stayed constructive, with PMI firmly in expansion at 52.5, and it is reflected in exports and imports, which grew by 29.7% and 49.2% year-on-year respectively. Inflation rose 2.5% year-on-year, driven mainly by higher food and dining costs. This reflected the implementation of a new household business tax regime, stricter hygiene enforcement, and seasonally elevated demand ahead of the Tet holiday. Housing and construction-related costs also increased due to Tet-related home repairs, although easing fuel prices helped offset part of the inflationary pressure. Finally, the Vietnamese dong strengthened against the US dollar, supported by higher domestic interest rates and a weaker dollar environment. The State Bank of Vietnam has set a 15% credit growth target for 2026, while requiring real estate lending to grow no faster than overall credit, signaling a more prudent policy stance. This approach aims to contain speculative risk, redirect capital toward productive sectors such as infrastructure and business investment, and support financial stability as Vietnam moves toward investment-grade status. Fitch's recent upgrade of Vietnam's long-term senior secured debt to investment-grade further reinforces this positive medium-term trajectory. Vietnam's stock market started 2026 on a positive note, with the VN Index rising 4% in January. Market performance was supported by both policy-related catalysts and a solid underlying earnings backdrop. Early in the month, Resolution 79 reaffirmed the leading role of the state economy, which shifted investor attention towards stocks with high state ownership. Given the relatively low free float of these names, capital inflows had a magnified impact on prices, lifting sentiment and trading activity. Average daily trading value reached $1.5 billion, up 36% from last year. Foreign investors remained net sellers, with outflows mainly concentrated in Vingroup-related stocks. Most importantly, earnings momentum remains very robust. Corporate profits in the fourth quarter grew over 31% year-on-year, bringing full-year 2025 earnings growth close to 30%. Listed banks recorded profit growth of nearly 20%, driven by continued credit expansion and stable asset quality. Meanwhile, companies in the construction materials sector such as Hoa Phat Group and Bimim Plastic reported sales volume growth of 30% in domestic construction steel and 20% in plastic pipe, respectively, reinforcing the view that the economy and industrial activity remain on a strong footing. Sector-wise, financials, energy, and utilities led the market. In banking, BIDV and Vietcombank rallied on concrete capital-related developments. In energy and utilities, Petro-Vietnam Gas and Petrolimex were key drivers, benefiting from the capital flow to state-owned companies. On the other hand, Vingroup-related stocks faced notable selling pressure from both foreign and domestic investors in January, with the correction extending into the first week of February. Our portfolio increased 7.0% in January, outperforming the reference index, the FTSE Vietnam Index, which declined by 1.4%. Companies in the portfolio have reported solid earnings growth, and some even exceeded our expectations, and we expect the momentum to continue in 2026 with projected EPS growth of 18.9%. The VN Index is trading at around 13.6 times forward earnings. While headline valuation has been influenced by large cap rallies, we see the more compelling opportunities in fundamentally solid companies with visible earnings growth. With 2026 forecast EPS growth for the top 100 stocks expected at 14.1%, the market outlook continues to be supported by fundamentals, reinforcing our preference for bottom-up and earnings-driven stock selection.